everyone to the third in a four-part series of DSLBD Build a Dream Lunch and Learns. This is a 30-minute overview of what is our typical 2-hour session on basic business financials. We'll explain a little bit about how we're compacting everything into 30 minutes as we jump through, but we're gonna move right in. One of the key principles of the work that we do at the Department of Small and Local Business Development and with our team, the Innovation and Equitable Development Division, is to think about how entrepreneurship is for everyone, whether you're planning to take that entrepreneurship to be your full-time work, if it's a side gig, whatever you're doing, everyone can be involved in entrepreneurship and work to pursue their dreams one step at a time.
We got none of the above right now.
So we're gonna make sure that we're keeping everyone on mute as we move through. This is a live session, but what we're going through today is we're going to be talking about the 4 basic financial statements, and actually we're really going to talk about 3 of those that you might use as a small business, a little bit about how you might work with an accountant or a bookkeeper, and then we're going to go into those statements, the income statement, the balance sheet, and the cash flow. And we're going to say just a little bit about financial analysis methods. There's a lot to learn in financial analysis of your business, so we won't be able to cover everything today, but we're going to get a basis so that you can continue your learning. So first off, we're going to talk about who is speaking. I'm going to introduce myself and then ask my colleague to introduce herself and our team and say a little bit about what we do. But my name, once again, is Kate Merrind. I'm the program manager for the Innovation and Equitable Development team, and I'll invite Camille to say a few words.
Good afternoon. Welcome, everyone. Hi, I'm Camille Nixon, Project and Capital Access Manager for DSLBD. One of my hats is to help businesses connect to the financing they need and find funding, which may be actual money, that's the best, but also saving money and finding ways to use your money that you do have effectively. And I'll be jumping in off and on throughout the session to add additional information as Kate's presenting, but we're great to have you. And I'll put in the chat some information about a new product that's online through our district capitalized program called DC Kiva Hub. It's a crowdfunding loan, and those great workshops coming up that you can learn about that later. Thanks for having me, Kate.
Wonderful. Thank you so much. And one thing I did drop in the chat and is also available if anyone reaches out to us at inno.ed@dc.gov. Again, that's inno.ed@dc.gov. The entire Innovation and Equitable Development team does 30-minute one-on-one calls with any business in the district on any topic to help get you started as you are gathering resources. And so you can feel free to book those at any time. We're going to say a brief bit about the Build a Dream curriculum. So this was developed in 2017, 2018. The traditional curriculum is a 10-hour course of 5 modules. Over 3,000 DC entrepreneurs have gone through the 10-hour course, and it's really designed for a lot of community discussion. This is one of our classes here. You can see that people are in small groups and talking. One of the important principles of that is we really want people to be able to be working with us and working with many of the technical assistance service providers across the district, but some of the best lessons and some of the best support that you're ever going to get on your entrepreneurial journey are going to come from other entrepreneurs. They're going to understand what you're doing in a way that anyone who is not an entrepreneur is not going to understand it in the same way. And so we really encourage you to be building those connections, even if it is in a different industry, with other people who are going through this journey. The way that the short course version works is this is a 30-minute presentation of what we would normally cover in 2 hours. You can find the curriculum, and we'll share this afterwards with everyone who has registered, but you can find the curriculum at this link. And so you can work through that packet anytime you want. If you want to run a class, you can choose to run a class. It's an open source curriculum. And what we'll do in this PowerPoint is we'll have some interim instructions if you want to come back later for how you would actually run that class if you wanted to do this in a group. But let's dive right into our content. Basic business financials, which in a certain sense, and I'll ask Camille to say a little bit about this in a second, the basic business financial documents that you need in some senses are your business best friend. They are, they're what really helps you know whether or not you are making money. There are certain forms that are standard across all industries, and those are the forms that we're going to be talking about today, so that you can know whether or not your business is profitable or it might be profitable. We know that a lot of businesses are engaged in the process of doing the actual work of their business, but this is part of the work of your business, is knowing how the money is working and is it working well for you. And that comes to this critical question. Whether you have a current business or you're thinking about creating a business, the question is, does it make money? And then how do you know if it's making money? So one of the key pieces of Build a Dream is that everything about business is about selling what you're doing, and selling it is also part about storytelling. And so what is the story that you need to know? This is not a fake story. This is a real story. What is the real story about how the money is working in your business so that you can move your business forward? And so, and I know I meant to ask Camille to jump in a moment ago, so I'll ask her to do it now. I think everyone is nervous about money in their business, even if they claim not to be, and that's very normal. But I don't know if Camille, you want to say a little bit about this.
Sure, and I'm the capital access manager, and true confessions, I am also worried about money and how to manage it. But it's like Kate mentioned at the top, is being able to know about it and use it to your advantage. You want to be comfortable with it, and it's something that you'll get more comfortable as you do it. And also be okay to ask for help through us or other resources. There's tons of free resources to give you guidance on creating financials and using them. But you definitely, it's something that you need day to day, as well as when you're going for additional support, as in loans or grants, they'll be asking for financial information, and it'll be helpful to have that available as well.
Thank you. At this point, if you were running an interactive workshop, you'd take a few minutes and let people just sort of talk about some of their fears and concerns or ways in which they have overcome those fears and concerns. I will tell you, having trained dozens of these sessions and trained over 3,000 people, every time we have this conversation with a group, it's slightly different. But there's that same space that, you know, there are things to be nervous about, and there are ways to overcome it. And being able to put those forward and address those, and if you can't put them aside, at least know that they're there, is a helpful framing for being able to jump into the rest of it. So today we're really going to talk about these 3 of the 4 basic financial forms. And so if you talk to people about financial forms for business, they're going to talk about 4. We have 3 that are listed on the side, and then 1 more that tends to be for publicly traded companies called a statement of retained earnings. We're not going to talk about the statement of retained earnings today because most of the businesses that we work with are small and are not necessarily publicly traded. But the 3 that we are going to talk about is the income statement, the balance sheet, and the cash flow statement. And these are really intended to work together. Many businesses, when they start, will start with just one of them, often just the income statement. But as we talk through what each one is, you'll see why having them work together, they all show a different view or a different part of the story of your money, and therefore they can all be very valuable. The income statement is also sometimes referred to as a profit and loss statement. So if you never hear income statement and you only hear profit and loss statement, it's primarily the same thing. What it is it is a quick, comprehensive look at the revenue and the expenses and whether or not you had a profit or a loss. And so it's a simple equation, and we'll walk through that. It is the most commonly used statement. It's sometimes completed monthly or quarterly, also annually. So it can be in different periods of time that you are putting together your income statement. And it can be very different depending on the quarter. So it could be that you are a seasonal business and your income statement looks a lot better in the summer than it does in other months. That's why it's sometimes helpful to look at it at that annual space as well, so you can see it amortized across the year. The balance sheet is the overall financial health of the business. And so this is all about the assets and liabilities and any equity in your business. And it's called a balance sheet because it has 2 sides, and we'll show a demonstration of that later. Do you owe more or do you own more? And that way, one good way to think about this is, if you're going to sell the business tomorrow, would you sell it at a loss or would you sell it at value? Would you have more value in it and therefore be able to get money out of it? So what is the overall business worth? And then the last one, the cash flow statement, which can be a little bit more complicated to both set up and figure out how you want to use for your business. Cash flow is about the timing of your money. When is money coming in? When is money coming out? Do you generally have enough money coming in or on hand so that you can manage your bills? Cash flow is the lifeblood of business finance, and cash flow is usually where most businesses fail. Even if you have an overall profitable business with a healthy balance sheet, you could run into a cash flow crunch or crisis if you have an unexpected bill or if someone doesn't pay you timely as they're supposed to. So being able to project out your cash flow and then think about risk mitigation, what happens if someone doesn't pay me, is going to help you know how much capital you need in your business so that you don't face that business failure. So one of the things that happens is you start looking at how you're going to put everything together. There are a lot of different tools that you can choose from as financial management tools. Probably the most common one that everyone uses is QuickBooks, but there are many other options on the market, or you can develop something out in Excel. There are a lot of different ways that you can use a tool to help put together these statements. But fundamentally, we want to take it away from the tools and just think about what each one is doing. How do you understand what's happening in that sheet so that as you put it together, you can use it for analysis for your business? So if 3 different businesses worked with 3 different tools, it might look fairly different, but they all should be saying the same things. In this time, if you were running an interactive workshop, you'd spend 5 to 10 minutes in the full group just talking a little bit about those forms, asking if someone can read the descriptions, and asking if folks are familiar. Usually some folks are and some folks aren't, and just a little bit of getting comfortable with those basic descriptions that we've put forward. We're going to take a moment now and talk about when and how you might want to work with a service provider. It is entirely possible for a small business owner to run all of their financial documentation and to run everything together. But sometimes we do need to call upon a professional, and that might be really helpful as we're preparing for taxes, when we first got set up and we want to say, I want someone to double check my work. Or it may just be the actual workload of being able to manage these on a regular basis is more than you can do because you're doing other things. And so working with service providers is very normal. It's very hard at startups sometimes to be able to afford a service provider. And what we see, and this is true both in accounting and in legal, depending on what's happening in your business, sometimes you can't afford not to work with those service providers. So as you start to think about how the money works in your business and whether or not you need help, there are different ways to think about how can you afford what that help will look like. We'll talk about that a little bit. So the first piece is you might be working with an accountant or you might be working with a bookkeeper. Either could be fine. An accountant has a little bit more schooling and certification, but a bookkeeper might be everything that you need. The best way to find these service providers, bar none, is to ask other small businesses for a referral. Who do they like working with? Why do they like working with them? What is that price? If you are unable to find a referral, there is a group in DC called the Greater Washington Society of CPAs. We do not know them, but it might be a space to look for a referral if you're looking cold in the marketplace and unable to find a warm referral. We at DSLBD cannot make referral suggestions because these are also small businesses, and so therefore we can't preference one over the other, but we do highly suggest that you ask other businesses who they like working with. When you first start working with someone, you can think about, do you want them to manage everything for you, or do you want them to just come in at certain times? So you can ask them to set up your original structure for your books, or if you set it up, you can ask them to review that. Or it may be that you work with them annually when you're preparing for taxes or a loan. And so you don't have to work with them full time. You can think about how much can you afford and what are you going to chunk out that are the things that you're going to ask them to do. But you do want to establish how your books work. And one of the important pieces, and maybe one of the lessons that we hear people talk about taking away from this training more than any others, is it is utterly critical as you start your business to establish your books and to separate your personal and your business finances. A lot of small businesses start as solo entrepreneurs and they're putting a lot of money into the business. And so sometimes they just sort of work it back and forth and they really haven't separated out what is the business's money and what is my money. If you want to understand how much money your business is making, but also if you want to reduce risk from yourself, it's important to have a separate account and a separate way in which you're looking at that money. And if you aren't at the stage of getting a business bank account, one of the things that you could do is just set up an entirely separate account, even if it's personal, and just treat that as the business money. And then you know what's going in and what's going out. That way you know how much you've invested in terms of money and putting into the business. So if you are always investing money into the business and never able to be taking money out, you might want to think about how to change your business so that it is more profitable and not as much of a burden on you. And eventually you want to get to a space where you understand how much have you invested in the business. That could be important for a lot of reasons, but you can both be counting what is the money that you've put in, but what is also the time. One of the things that small business owners sometimes forget to do from startup is to pay themselves because they don't have the money to pay themselves. So even if the business doesn't have the money to pay you now, if you are looking at what your rate is and what the hours in are, you know functionally how much the business owes you, and you can account for that in your books. The other thing that can be really helpful to do, if you can't afford an accountant full-time or a bookkeeper full-time, but you have created a relationship with one, is to think about how much will it cost you if you need quick advice. So if you hit a crunch point and you need to talk to somebody, if you've already set up in advance what that's going to cost, you'll be able to know whether or not you can afford to talk to them when you need to. And that takes us to another point, and I'm going to ask Camille when I get through some of this if she wants to add some in about what it means to get business banked. We talked about having those separate accounts, but really being able to shop around and find a bank that you want to work with. One of the things that we found during the pandemic particularly related to the PPP. For businesses that were banking with larger banks, they might not have gotten as much customer service and support. When you are shopping around for a bank, you have the option, if you don't like the support that you're getting from that bank, to talk to another bank and move your business there. And so anytime that you're working with someone for banking services, they should know you, they should know your business, they should be able to provide other referrals, and they should also be able to talk to you about your money without necessarily using a lot of lingo and jargon. Banking is full of lingo and jargon. Investopedia can be a really helpful way to catch up on some of that, but anyone should be able to talk to you in plain language about your money. And if they can't, you might want to think about how are you working with someone else. To be able to get business banked, you might need to be licensed or registered. So that's why you might set up a separate personal account. But once again, it can be a really big problem if you are mingling your personal and your business money. Camille, I just want to ask if you want to add anything in on the.
Sure, just to underscore, when you're starting out, it's a lot of things to juggle, but it is very ideal that you get to your business bank account, a separate account, as soon as you possibly can. It helps towards your path of keeping your business and personal separate financially. And also, as you look into getting other types of financing through deposits of grant money you may have won, or working to get a loan, it's helpful to have the bank and having that relationship. You may need to shop around. Later on, we'll put in the chat a link to DSLBD's workshops, including our Money Monday series. You'll see in the schedule coming up, banks will be presenting. They tend to be traditional banks who are open to working with smaller and local businesses. So that might be a way to come to that, introduce yourself to the loan officer there and the banking officer there, and that might be a way to find a bank that's a good fit for you.
Thank you. So at this point in the training, if you are running it, you would ask for recommendations of service providers if anyone wants to share, and that could be a good way to get those referrals started. All right, I know we are short on time, so I'm going to go through our statements and have us hop in. The first piece we're going to look at is the income statement and or the profit and loss statement. You see we just have an example here of what one might look like. They could look different, but this in red, this income, expenses, profit. So the basic way that an income statement is set up is you are looking at whatever period you've set it up for, a month, a quarter, a year, how much money came into the business. Then you're going to look at how much money the business had to spend on expenses, all of the expenses, and then you're just going to subtract it. And then you're going to see what's left. Hopefully it's positive, because then you will have net profit. If it is negative, then you know that you are operating at a loss, and you need to think about what does it mean for you to become profitable, and is it possible for you to become profitable in the amount of time that you want to. So we have this sheet here to just show the income statements as you start working on them or start working with a service provider on them, they can get a lot more complicated. You know, you see a lot of charts and a lot of rows. One of these here sort of has it broken out by month, a lot of different expenses that might be coming in. So the piece to really understand, you know, even as you're setting up your own, is it might be complicated, but it's all still that very basic equation, which is the income or revenue that is coming in minus all the expenses equals your profit, or if it's negative, equals your loss for that period of time. So this is a little bit more about a chart. If you wanted to do a first income statement, you can do this pretty easily on your own. You can even do this at startup and imagine what your expenses might be. So you can think about what you're selling and at what price for a unit. Look at every expense that you have for both startup expenses and ongoing, and then subtract. One of the exercises that we typically do within the session is have people try to do this for an imagined period of time in their business. And what people end up finding is they have way more expenses than they had realized, expenses that they were just paying for personally. And so it can be a good exercise to start with so that you're really seeing exactly how much money is in the business. And so if this was an interactive session, we'd have everyone spend about 10 minutes trying to come up with a sample basic income statement so they can start thinking through what are all those expenses, and in order to cover those expenses, how much am I going to need to sell at what price? So we're going to dump right now directly into the balance sheet. And again, the balance sheet is that second form. It's the one that is telling you whether or not you owe more or own more. Assets are positive money in the business. And you can see on the sheet here that that one side is assets. And it's sort of against, almost like a seesaw, the liabilities, how much you owe. And so as you start to think about it, you're thinking, do I owe more or do I own more? And at the beginning of a business, or when a business is going through growth and taking on debt, it is not unusual to owe more. But you want to always be thinking about what that health looks like and how are you moving the business back towards for it to own more than it owes more. And that's something you can assess. This is typically done on an annual basis or anytime there's a major change within the business. So this again just sort of shows us the one versus the other. Assets are things like cash on hand, property, equipment, payments that are coming in, inventory that you have, and supplies. Liabilities are things like debt or loans, bills that you owe, so accounts payable, or interest that you have to pay, or future interest that you have to pay. And you're balancing them one versus the other to see which one comes out more strongly. So the one thing to know about a balance sheet, similarly, when you look at them, there can be lots of different formats. We showed it sort of left to right. A balance sheet could put together top and bottom. So how the sheet comes together doesn't matter. It is the function of what's happening, of showing you one thing versus the other thing. And so in this, in a group, you would just spend a few minutes in a group discussion talking about what a strong balance sheet is versus what it means to build that strength, and just sort of reflect on it. Because for some people, this is a new concept to be thinking about how the balance sheet comes together. And now we're going to get into the cash flow statement. And this one, cash flow, as we say here, a cash flow crunch can break your business. So it is all about the timing of when the money is coming in. You have to make sure that you have enough money to cover your bills. Cash flow over time can potentially have a shape, but it will take you a while to understand what the typical cash flow is in your business by seeing it happen over time. You can project it, you can be thinking about what's going to happen, but you also want to think about what happens if something goes wrong. Because if everything is moving, it's kind of like spinning plates. If you don't have a lot of wiggle room, you could fail. Your business could fail because suddenly someone doesn't pay you, so you can't pay someone that you owe. And so that's what you always want to be looking at. Do you have a healthy cash flow? Do you have enough money on hand to pay the bills that you owe? So the cash flow statement complements the other two. And so often people do the income statement and the balance statement first. But even before you have a cash flow statement, you could be managing your cash flow. And a few key things on this is to always be thinking about reducing your costs. How can you reduce your costs? Making sure that you are getting paid on time, which sounds good, is incredibly hard. For many small businesses, it is hard to collect on what people owe you. Sometimes you get delayed, sometimes they don't pay you at all. And so how can you be structuring your business to better avoid having people delay paying you, and then be prepared in case there is a delay? And then within that, you can start planning out your future expenses and thinking about what cost coming in is going to pay for what cost going out. One thing that is here that is very important that we always underscore: if you have staff, if you have employees, you have to make payroll, and you have to make payroll on time. We're going to say that again. If you have staff, you must always pay them on time and in full. There are a lot of reasons for this. One, it is the law. You could face a lot of problems for that legally, but it is also very important reputationally for your business. If you become known as someone who does not pay your staff, it'll be very hard to have people work for you in the future. So there are different ways to be thinking about how to track your cash flow even before you have a cash flow statement come up. For some businesses, they need to track it on a daily basis. It depends on how much wiggle room you have, what is the length of time that you've been in business, and are things changing. But you'll see here, and we'll do this equation again, you'll have a starting balance of how much cash you have on hand, how much cash is coming in, minus the expenses that are there, equals the cash remaining. And so you could do this over any period of time. You could look at your cash flow on a daily basis, on a weekly basis, monthly, whatever you need to do as you're starting to see how variable is the money in your business. So it's that same equation. It's written right here. How much cash do you have at the start of this period? How much cash is coming in? What expenses are going out? And how much cash is remaining? So if this was an interactive workshop, everyone would spend about 5 minutes writing down a scenario for how they think cash flow will work in a week, month, or year of their business. And it's going to be different for everyone. And even for two businesses doing the same thing, it might be very different depending on how much they had to get started and the way in which they are marketing their business. So one of the things that's so important for all three of these things is that you can put them together, and then you can know a lot better how the money is working in your business. For a lot of businesses, they know one piece of this puzzle, but not all of it. And so if you can put all of the pieces together, then you have an understanding of, is my business profitable? And do I need to request more capital in order to be able to, working capital, be able to move forward? So these are the three questions that it's really answering for you. Is the business profitable? That's what the income statement is telling you. Is it profitable? Is it profitable during a certain period? Is it profitable overall? And the more time in business and the more that you are able to see quarter after quarter or year after year, you can see the general profitability of the business. Is the business worth more than its debt? Always an important thing to have an awareness of, which may be important if you want to sell, if you want to reduce risk in your business, or if you want to take on more debt. And then, can the business manage its bills, which is utterly critical. And I think the one question to really ask yourself with this, if someone doesn't pay you on time, will you lose the business? And so you always want to be keeping an eye on that, because one of the things that happens, and I'll ask Camille to say a little bit about this, often businesses do not prepare to take on more capital. Then they hit a cash flow crunch, and then it is very hard to get capital quickly when they need it. And sometimes they will go into bad loan or credit card situations in trying to manage a cash flow crunch. I want to see, Camille, anything that you want to add in on that?
Sure. To Kate's point, there is always money out there, but the price you pay to get to that money, online proprietary loans, for example, very high credit card interest rate, by paying stuff off by credit card, it's the price. That price may actually sink you even further. It may not be the solution you're hoping for. So being on top of this and being in a place of non-debt is the best place to be when you need to get help, to get a loan or other assistance. And that's why keeping on top of this on daily, weekly basis is so important, and getting comfortable with it and being realistic about it, being honest with your numbers.
And I'm going to make a statement, and I know that everyone does this, and yet it is very bad for people when they do this. So if you remember nothing else that I say, I hope that you remember that we advise against putting business costs on a personal credit card. Once again, I will say that we advise against putting business costs on a personal credit card. It is very common, but it comes at a high rate. And if the business goes bankrupt, you cannot discharge those costs in bankruptcy. We have heard of people building out entire restaurants on their personal credit, the restaurant not being able to open, and then they were tens of thousands of dollars in debt personally that they could not discharge. And so being able to use this format and use the process helps to protect you against things like that. So I know we are short on time, so I'm just going to say a little bit about this and you can come back. These are some important financial management concepts. There are many more, but we've highlighted a couple here that you can be learning about. One is, how are you mitigating risk? Every business has risk, but one of the most important things for your business is to reduce risk as much as you can. So the more that you are looking at things, the more that you can come up with strategies to reduce risk against the business and against yourself personally. If you were in startup, it may be that it will take a while until your business is profitable, or that it owns more than it owes. But one of the things that you are looking for is traction in the marketplace. Traction means that someone is adopting your product or your service, and it looks like more people will. So as you are doing analysis in the first couple of years of your business, you are looking for traction, and you are looking for evidence that that traction means that the business is going to grow. Another important concept is break-even analysis. This is why it's important to know how much time and money you've put into the business. When does it start that your business is now making more money than it owes? And so you know that you will be able to have this business be successful. Everyone has a different break-even point, and everyone has a different runway for getting to break-even. How much can you afford until it has to start making money? But you'll be looking at that analysis. And then I'm not going to go deeply into ROI, but you hear people talk about return on investment a lot. What I'll just highlight here is that there is an actual equation for return on investment. Again, we suggest going online or going into Investopedia to see a little bit more about how the technical equation for ROI works, but that may be helpful to know at some point. So I'm going to say a brief thing about financial projections, which every business should do at startup and every business should be doing regularly. This is forecasting. This is guessing in the future how the money is going to work. So if you were going for a loan, if you were going for investment, or if you're just thinking how much longer are you going to run this business, those financial projections are important. You're going to be using the above documents, and if you're going for a loan, you're probably also going to use a personal financial statement to forecast how the expenses and profit will work over the next year. These financial projections are hard, but there is, if you want to get started with a free resource, and we'll drop it in the chat, Score DC is part of the SBA Score Mentor network, and they have some financial projection tools that you can use if you wanted to try that right now. It's all in Excel. And so you can be trying to do the financial projections for your business. So you get a sense of what your business money will look like in the future. And we're gonna end on this point because it is true that the financial projections are hard. You're guessing. You're making an educated guess about what's going to happen, and you won't know until you do the things and you see if anyone is buying and how it's working out. We're going to highly suggest that you make those honest guesses. And what we mean by honest is telling yourself the truth. I think when we are starting a business, it is very reasonable that we have a very high level of optimism. Entrepreneurs have optimism, they have to, but being able to be honest with yourself. And one way to do this is to set two sets of financial projections. What is a good case scenario and what is a worst case scenario? That way you are preparing yourself for both of those scenarios and understanding how much runway do you have to keep trying this portion of the idea versus when do you need to pivot so that the money works out a little bit better. And we've just put some of those simple questions, away from all of these forms very much at the end. How much will it cost you to run this business? How much money do I have to run this business? How much money do I need to take it to the next step? Why do I think this will be successful? And how long will it take me to break even and become profitable? Those questions are questions that you need to tell yourself the story of, and it needs to be based in sort of your analysis and what you're seeing in the marketplace. And it's a set of questions that you'll need to ask yourself repeatedly. So I know that we are at time. I know we covered this all very quickly. I'm going to ask Camille to put into the chat again, if you'd like to spend a little bit more time talking with someone about some of these ideas, you can always reach out and do a technical assistance call with ourselves, or we can help connect you with other technical assistance providers across the district. This is our third session of Launch and Learns throughout May. So we did our introduction to the Lean Canvas at the beginning. We did customer discovery last week. Both of those are recordings available to you that we will send along with these materials. And next week, we hope that you'll come back. We're going to do a session called Your Ecosystem. And Your Ecosystem is all about being able to find the many resources available to you in the district and how to think about how to use them and when to use them. It can be overwhelming, actually, the number of resources that do a small thing for you. But the more that you know about them, the more you can create a plan of when and how to use them. So I want to just ask Camille if she has any closing thoughts.
Oh, no, Kate, excellent job going through everything in a short period of time. When you heard her voice go strong, those are things to focus on. And just to add, I dropped in the chat a link to where you can find these events that Kate mentioned and others, including the Money Monday series on financial management and funding. It's at bit.ly/DSLBD Eventbrite. Feel free to sign up there.
Wonderful. You can go ahead and stop the recording, and then I'll stay on in case anyone does want to ask any questions.